And now traders at Axis Bank expect quiet trading at the bond market as investors position ahead of Monday's auction, where 450 billion naira is on offer across the 2029, 2031 and 2035 papers. Now for the T-bill side, positive sentiments are supported by improved liquidity from FAC and coupon payments. Dimeji Obasa, fixed income dealer at Axis Bank, joins me now for more market movement. Dimeji, thanks a lot for joining us on the show today. Now walk us through the outcome of the midweek primary market auction and how this sets the tone of what we should expect next as investors are also looking towards Monday's 450 billion naira auction.
Thank you, David, for having me. As you've noted, yes, we did have a primary market auction for NTB, that's the Nigeria Treasury bills, on Wednesday. We saw the auction was well participated. We saw the longest bill on offer, the 364-day close at 21.8%. After that, we've seen a significant rally for that bill, as well as other bills in the Treasury, in the market. We saw the one-year paper trade to as low as 20.8%, about 100 basis point reduction from the auction. So that has been quite active. As far as the bond auction goes, as you've noted, we have 450 billion on offer, with about 200 billion skewed towards the longest dated paper that will be offered, the 2035. It's worthy to know that that's a new offer to the market. What we just expect is that we would have this auction set the tone for the rest of the year. So market participants are looking very closely at what's going to be the outcome of the auction. As it relates to the stop rates, we have opinions divided, being that this is the first auction of the year. For us here, we do expect that the minimum that we would see the auction close, particularly on the longer end, would be 22%.
And in terms of liquidity levels now, how do you see that going forward into the near term?
So we've started to see the federal allocations come into the system. That has helped with the system liquidity. But just going into next week, given the auctions that we have, that we've also had this week, and the debits for next week, we expect the market would be tight next week.
And talking about how next week would also pan out, you know, we are gradually wrapping up the month of January, and a whole lot of focus is on the NBC's expected release of the rebased GDP figure and how this also paints a much more holistic picture from what we've also had for the December inflation numbers. But in terms of some of the latest feelers we're having from the central bank, we're not having the Monetary Policy Committee meeting like other central banks here in West Africa. In the coming week, that will be held in February. But this statement from the CBN expecting a GDP growth rate of about 4.1%. How is the market overall responding to this? Because this is quite a little bit of a move, more optimistic move away from what we have from the likes of the World Bank and the IMF.
So in the fixed income space, we've not really seen a lot of reaction to that forecast. You know, it will most likely be data-driven. When we start to see the inflation figures come out, as well as the GDP figures, maybe we'll start to see that filter into the secondary market trading activity. But like I said, you know, this primary market auction is going to be the defining factor that will set the tone for trading in the fixed income market going forward, particularly on the longer end with the bonds. On the Treasury bill side, like I said, we've had significant rally. We've seen a lot of activity there, and we've seen yields come down slightly, particularly for the longer dated bills. So overall, we do expect that we will be having a very active market next week as we look forward to seeing some of this data being released just being released generally.
Dimeji would have to leave the conversation here for now. Thanks a lot for the updates there. That was Dimeji Obasa, fixed income dealer at Axis Bank.